Everybody loves a low-cost investing platform, and the one we're talking about today is InvestEngine, and it definitely ticks that box. It is commission-free investments. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. This video definitely isn't financial advice, it's just a bit of education about how to use the InvestEngine platform to invest. And past performance definitely doesn't guarantee future results, and when investing your capital is at risk and you may get back less than you've put in. So why do I like InvestEngine so much? I suppose there's a few different reasons, and on the screen you've got them. It is unbeatable value. You'll see in a second how cheap it can be to use this platform to invest in ETFs, and there is that power of ETFs. In reality, you could just go and do all your investing with one single exchange traded fund. What I love about the InvestEngine platform is the way that they allow you to slice and dice the information. You can see what it is that you're actually investing into really easily and really simply, and you'll see that when we get onto the platform later on. It is so easy to do this. Everything can be automated, so you literally have money gets drawn out by direct debit, boom, straight into your investments based on how you have set that up. You can diversify. You can pay in as little as £1 in to buy a fraction of an ETF, and you've got that choice of either the DIY or the managed fund approach. In this video, I'm going to take you through the DIY portfolio approach and show you how you can build your portfolio choosing from over 590 different ETFs. And show you how you can set up smart portfolios, how you can do balancing of the ETFs that you're looking to invest into, explain the one-click rebalancing side of things, and we'll also have a look at how you could set up an automated investing program. So this is basically the savings plan. And then I will give you a few pros and cons about the use of the InvestEngine platform and why I am so excited about the new changes that are coming in on the individual savings account processes, where you're going to be hopefully allowed to have more than one ISA provider every year. And I'll tell you what I might think of doing at the end of the video. Another thing that's really important when you're using an investing platform is that it is authorized and regulated through the Financial Conduct Authority and the Financial Services Compensation Scheme. And basically this provides government cover of up to £85,000 within your portfolio being covered by the government if InvestEngine was to go bust or go into administration. Currently, InvestEngine has these three accounts: the individual savings account, the general account, and the business account. And coming very shortly to a town near you, there will be the self-invested personal pension, the SIP, and I'm really looking forward to getting my hands on that. If you've been finding some value out of this content, I'd love it if you could like and think of subscribing so you can get notifications, so you can get new content coming to you as and when it's released. I'd love to hear, are you using InvestEngine, and are there some features that you just couldn't do without? Love it if you could drop a comment down below. So if you've used the link down below, you'll end up getting a bonus of something between £10 and £50 for using my link, and I get a little bit of a kickback on that as well. Once you've set everything up, you just click the Add New Portfolio, and that takes you through to the choice of whether it's a DIY portfolio or a managed portfolio that you're going to create. In this video, we're going to have a look at the creating a DIY portfolio. I already have an ISA, so I'm just going to go for general account. So once you are in the DIY portfolio, you've got lots of stuff on here. You can either go and discover by having a look at their featured partners. There's lots of different types of collections in here that you could go and have a look at. So if you want dividend focused, you can go and have a look at some of those. Otherwise, you could go for something that a friend of mine is talking about at the moment is multi-factor side of things. Go and have a look at Tom's channel and he'll take you through some of the ways that factor investing might be something that's of interest to you. Let's go and stick a couple of ETFs, bonds in there. Let's go for that government bond. Go in and have a look at some of the details in the key investors information. Once you're happy, you just press add to portfolio, and that's a bond that we've put in. I'm now going to go and have a look at an equity. Let's go and have a look at just adding in VUSA. You get a little bit more detail on the ETFs. You'll get some of the details of the companies that you're going to be investing into, and you'll also have the key investor information in there as well. So we'll add that to the portfolio, and let's go and do a quick review of what we've got in there. I don't want to end up with a 50-50 split. You can weight your portfolio as you wish. And on this time, let's say we will go for a 20% in bonds and 80% in the S&P 500. This is not a recommendation of any way of doing this. This is just to show you that you can change your weightings in your portfolio. We'll do a review. And what I really like about this is going to give us a look at where are we invested into on the equity side of things, and then looking at regionally what the split is looking like. So we are looking at North America, unsurprisingly. In the sectors that we are investing into, we're very much into industrials and then technology, and then the holdings that you have in there. Obviously, you've got the Magnificent Seven in there, and that is hardly a surprise thing. You have got VUSA in there. Do save and continue, and that's us ready to start investing. It is really that simple to get started. You could end up adding some cash just straight away in there, or you could go for setting up a savings plan. You can do that weekly, fortnightly, or monthly, and that just automatically will put money into your account, and it will also then just invest that into your portfolio based on the weightings that you've got set up in there. You can go and add some extra securities in if you want, and you just go through that process again. As you start to add money to this, you will then start to see the yield changing on here, and you will also see that your portfolio TER is nice and low at 0.09%. And if you want to, you just click on those analytics, and you can see how your money has then been invested, and you can also see what you're looking like on your asset class analytics. So that was just a quick overview of how you can use InvestEngine. My take on it, I really like the platform. I didn't use it this financial year just because I wanted to dabble a little bit into the dividend stock side of things, and Trading 212 provided me with the opportunity to do both ETF and stock investing. Going forward into 24-25, I am seriously considering coming back to use InvestEngine for the ETF side of things. I just like the way the platform is set up, the easy to use, user-friendly mobile app, etc. So there are lots of pros to using InvestEngine. I think one of the easiest is you've got that wide range and really comprehensive list of ETFs, and they are constantly adding to it month by month. You can look at that commission-free trading in ETFs that you can do fractional. Once you've got set up, you can be investing just £1 into different ETFs, which is brilliant, as well as it does have the ISA, and it's got the SIP coming on track very, very soon, and I'm really excited about that. The mobile app is brilliant, really easy to use. The automated features that they've got just make it so easy to just set things, forget, and let the whole system just run by itself. And I think finally the portfolio, I just love being able to jump through and look at region, what stocks I'm actually invested into, etc. I think the interface is better than the Trading 212 interface. There are some cons. it is only an ETF platform. I think it's going to remain like that. I think that is their USP that they have, and it is how they do that commission-free trading. I might like to see, though, even though I can't avail of it, the lifetime ISA being provided by them, and also getting the junior stocks and shares ISA onto their roadmap would be something I think that might draw more people in. They also don't have any Vanguard life strategy options, which might be something that they attempt to get their hands on as well. And I suppose the last con is they trade once a day. You can buy these ETFs once a day in the early afternoon, but while I say that is a con, it doesn't really bother me. Thanks very much for watching, and I will see you in the next one. Cheers, bye.